Excel accounting practice problem. Adjusting entry, accrued interest, part number 2. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now continuing to enter transactions into it if you have access to it. There's 2 tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In a prior presentation, we put together our amortization schedule. Now we're going to be using it to construct our adjusting entry worksheet, remembering that all adjusting entries will be as of the end of the period, end of the month or year, typically our cutoff date being the end of the month of February. So we're going to go back to the practice tab, record this out. To do so, I would like to see my journal entry information on the left, relatively close to where we had our worksheet that we put the schedule together. So what I'm going to do is hide some cells. I'm going to put my cursor on this skinny cell right here on the skinny, and we're going to go all the way to the right until we hit that amortization schedule and practice hiding stuff, hide the stuff, and then we'll have to unhide it when we want to post. So I'm going to go all the way back over here. We got the subledgers, we got the inventory subledgers, just a whole bunch of stuff. We're just going to go all the way on over the payroll and stuff. Here's the first amortization, and there's the second one. I'm going to put my cursor right to HS here, and then I'm going to right click and hide all that stuff. Just hide, don't delete it, just hide it. It's hidden. So now we've got our schedule right here. You'll recall last time we made our amortization schedule. We're imagining that this loan happened on 2/15. We're not going to make the next payment until after the cutoff date on 3/15. And when we make that payment, that's fine, but that's not going to pick up the fact that we accrued 15 days of interest during the 15 days of the current month that we haven't yet paid, and we're not going to pay until next month. So that's what we're going to pick up here. We're going to pick up half of the interest. So the interest portion of the payment, notice what I'm not doing here, by the way. I'm not taking the full payment and taking half of the payment because I haven't incurred, the payment isn't what we're looking at here. We're looking at the expense that has been incurred. The amount of the principal we're paying down is just simply going to be paying down the loan balance, which is a balance sheet account. The interest is the expense that we've incurred that we have not yet paid. And so that came out to be the 146. So that 146, half of it was incurred before the cutoff. So if I take half of it, it comes out to about 73. Now you're probably saying, hey, look, that 73 is awfully small in terms of a dollar amount. Do I really need to do the adjusting entry? If it was that small, it probably wouldn't be the material, in other words, relevant to decision makings on the financial statements, but the concept applies because you can imagine a situation, of course, where the loan was a lot larger and or you had different kind of amortization schedules other than a standard fixed payment loan. So that's going to be the idea of it. And again, some of these adjusting entries, you might look at them and say, maybe I'm not going to be on an accrual basis. Maybe I'm more on a cash basis or a tax return basis. And you're saying I'm a smaller company, maybe I don't need to do some of these adjusting entries. Possibly you don't in those cases, but some of them you will not be able to avoid. So this one is an accrual type of entry, meaning we're recording something even though the cash had not been paid. We're recording it when the income or the expense was incurred, when it was used, which is an accrual concept. So we're on an accrual type of basis when we're thinking about this. And so just, keep that in mind as well. We will also have a reversing entry that will be related to it, because you can imagine that when we record this adjusting entry, it could throw off our normal accounting processes, and then we'll do a reversing entry to kind of reconcile that. So let's first do the first transaction. We're going to scroll to the right. Notice we have some hidden cells over here because we hid the reversing columns, which we'll take a look at later. And so we're going to record our transaction. It's going to be on 2/28, as all adjusting entries are. You probably want to put in the memo somewhere that it's an ADJ or adjusting entry. So I would label it as an ADJ. You can possibly put it underneath, like here on the date range, or maybe if it was in Excel, you can add a note to it to give more detail. So you might then say this is going to be the interest expense down here. And then we're going to go to the interest expense, which is way down on the bottom because it's going to be an other. We put it in the other category on our financial statements, which we will see more clearly when we do our financial statements at the end of the adjusting entry process. The other side then going to the payable. We don't have an interest payable. We're going to have to add it. So hold on a second. Going to just go down here. We need an interest payable. It's going to be a liability account. So it's going to be, let's put it above the loan. I'm going to put it in alphabetical order within the liability accounts because that's possibly how it would show up most likely in accounting software if you weren't using account numbers. So if you're working, for example, in a worksheet and you're working along with someone that uses accounting software and does not use account numbers, it's nice to try to stack your worksheet up if you have to add new accounts in such a way that it'll be the same once they add those accounts to the accounting software, because then it'll be easier from year to year because you'll have the same ordering of the accounts. So we're in the liabilities, and then within there it's going to be in alphabetical order because I'm not going to be using account numbers here. If you have account numbers, you have more control over the ordering of it. So I'm going to select these 4 columns or 4 cells, right click and insert, and then shift these cells down. And so this is going to be, then we're going to call it interest payable. Now you could also call it, you might call it interest or accrued interest because the interest has accrued upwards and you have not yet paid it. So that's another name that you can call it. And sometimes some people might think that's a more professional name. That's kind of a more maybe possibly traditional name. I like to use the payables for the liabilities because to me, I think it's kind of universal that, you know, it's easy to hear, oh, payable, that means it's a liability in my mind. So I think that to some people might be more clear, if not as, you know, possibly sophisticated a terminology. So pick your terminology and record it accordingly. And so then we're going to go up top and say this is going to be the liability that's going to be going to the interest payable. And we will indent over here, go into the alignment and indent. I'm going to indent the liability. I'm going to put both the debits and credits in place in my worksheet, but when I record it over here, I'm going to condense them down, representing the credits with just a negative number, which, as we discussed when we put the worksheet together, logistically is often much more easy to do. So we'll see that as we go. Hopefully you will be convinced of that. So this is going to be equal to, I'm going to pick up the amount from the table. It's going to be that 146 divided by 2, which is about, because we rounded, I took the pennies off, 73, although the pennies are still kind of in there because if I was to add them in the number group, it's calculating with the pennies, but I'm going to remove them. And then we're going to say this is negative of that number. So I'm putting the credit over here as a negative and in the credit side, and we're indenting. Look at how redundant that is to do all those formats to indicate it's a credit. We only really need one format to indicate it's a credit, either in the credit column or indented or a negative number. When we post it, we're going to choose the negative to indicate that it is a credit, that making the formulas a lot easier for us. So I'm going to post it out. Now, one more thing, just note that you might want to put like notes into your worksheet, and Excel is great to do that. So if you were to say, this is an adjusting entry, I'd like to comment on that. I would like next year for people to be able to determine what I did this time and why. And you might put a more in detailed note up top in order to do that. So you might like right click on, and then I'll put a note down here, a note, and I'm going to say that to record like 1/2 month interest on loan according to amortization table or something like that. And you might say, I don't need a note because I know what I'm doing and so on. But remember, a lot of times you're going to be trying to transfer your work to somebody else possibly that's going to be working for you. And you'd like to make it as clear as possible and train other people to make it as clear as possible so that whoever's picking up the work next year can kind of pick that up. So if you could put the note there, that can be useful. It's also useful if you were going to give this to the client and try to convince the client to enter these adjusting entries into their system in some way, shape, or form as well. So it's often a nice thing to be able to do, and the note doesn't get in the way too much as you're just working around the worksheet down here. So we're then going to post it. We're going to say, okay, let's post this thing. We're going to post it out. So this is the interest expense. I'm going to scroll down to the middle column now. And notice in the middle column, all I have to use is equals and pluses. I don't need to use any negatives. So I'm going to say equals and post to that 73. That brings the balance in the interest expense from 596 up by 73 to 669. We're out of balance now on our debits and credits. Notice how nice and easy that is to see. and then our net income was at income. This is going to be the revenue minus the expenses of 4770. Then the interest went up by the 73, bringing down net income to the 4697. Notice how now fairly easy these formulas are relative to if you set the worksheet up differently with like 6 columns to see. Then the other side is on the payable. So the payable is going to be down here, interest payable. We're in AM16 equals, and we'll scroll up to that payable to the 7300, increasing the payable to 773. So there we have that. So now next time, what we're going to end up doing is we're going to have to reverse this, because now note that now that I have this into the system, it's going to make it a little bit more difficult for the accounting department to record their entry according to the amortization table, because what they would normally do is just record the entry according to the next payment that happens. And now I've got this kind of adjusting entry item in place that can confuse them to some degree. So we're going to go back on over and clean that up. Before we finish up here, let's unhide some cells. I'm going to go from AO to HU, AO to HU, right click and unhide. And so there we have. Now notice this reversing columns. We'll use that next time. And notice I added this extra column here for some reason, which isn't doing anything of use or of note. And also notice that when I added the new cells, I added it in such a way that it didn't get added to the hidden columns, which I need to be more careful of. So one, I'm going to clean that up by deleting the AQ column, selecting the column, right click on it and deleting it. And then two, the new column, the new cell I put in place is right here. So I need to adjust my worksheet and move these cells down to meet that new cell. So I'm going to select these two cells, right click and insert, shift these cells down. And so there we have it. And now I got to adjust all my formulas to make sure they're picking up the proper amount so they look good. This one's going to be the 73 plus any adjustment right there. So there we have it. The rest of them look like they're copying down properly. If I scroll down, my totals still look good down below. My total here looks good. My total here looks good. So that looks good. And then let's post this out to the general ledger now as well. So I'm going to go back on over here. I'm going to go to my interest expense. That's the last account down below, last account. So I'm going to go all the way to the right to post the interest expense this way. All the way to the right to the last GL account, posting it to the GL. There it is. And I'm going to call it an ADJ instead of the date, just so we can make them distinct in our general ledger account here. And so then in BN19, I'm going to post it here by saying equals, go all the way left to the wall, left until I hit the wall. I'm going to do this with a formula. You could type it in there, but the formulas are going to make it easier if there's an error to figure out what happened. Enter. You could do that by putting your cursor on this item using these little buttons here to then see where that number came from. Those buttons are in the data area, and they are in the formula area. They're right here. So I right click and add them to my ribbon up top. So that's useful. And then we're going to go all the way to the left and record the other side to the GL, recording it to interest payable. That's going to be in our liability area, the third liability. Scrolling to the right, picking up the liability in the interest payable. So the interest payable, which I have to add, that was a new account. So I'm going to have to put it right here in the GL. So I'm going to remove this line. I'm going to copy the ones to the left of it from the skinny to BS, Control C. I'm going to put that and insert it in this skinny, right click and insert the copied cells. I'm going to delete the activity on them. So I delete the activity. The second one I don't need at all. So I'm going to remove it. I'm going to paint it to be a normal cell and then delete it. So I'm going to go to the paintbrush and just paint normal cell on it and then delete it. And then up top, I'm going to record in cell BU2 equals left till I get to my GL account. And I'll pick up then the amount or the account of the interest payable. Enter. And then I'm going to call this an ADJ again instead of a date so that we can identify them distinctly from the other items on that date. And then a BV5 equals left until I hit the wall. And then I'm going to pick up that account payable and enter. Now notice that posting to the GL is something that you might not always do when you do the worksheet because you're focused in on kind of like the worksheet, but it is something the GL is, you do want to add it to the books, to the actual books, oftentimes, after you're done with the worksheet. So we're going to add them as we go. We also need to add that account into our check figure up top. Double click in the check figure, going to the end of it and saying plus, putting the cursor back down and picking up that GL account, the GL account of the 73, and enter. So that puts us back in balance here. So that looks good. So there we have it. So again, next time we'll do the reversing entry and we'll talk about how this adjustment could mess up the bookkeeping department and why then we would want to possibly do a reversing entry as of the first day of the following period.